Hello, welcome. This is the series again, Mastering the Market Structure, and today is episode 5, Structural Verification and Time Frame. Wow, this is the best episode you want to learn, and this is going to be a very good lesson for everyone who is uh, uh, about to become a pro trader. So let's get into the lesson. All right, now in structural verification, we're going to talk about some few things here. So I want to sort out first the things that we're going to learn in this lesson. First of all, we're going to learn on how to mark the structure. Okay, how to mark structures. Okay, excuse my handwriting here. Excuse my handwritings. Okay, now that is the first thing. The second thing is how to identify between a valid break and invalid break. Okay, we're gonna talk about how to identify, how to know this is the valid break of structure or it is the invalid break of structure. And in this case, we're going to talk a little bit about FTAs. And in the sense of FTA, we're going to talk about time frame. Okay, time frame. And after that, we're going to go into the chart and identify between so we're gonna identify between the break of structure and a change of structure. So we're going to talk to this lesson. We're going to learn these things here, very important things that you need to learn. So let's start with the first one: how to mark a break of structure. Now you have to know that a break of structure, first of all, we learned about the market movement in the first episode, whereby we have a bullish market structure and we have a bearish market structure, and sometimes we get a consolidation like this, but we're not going to consider this a little bit more, but we're going to consider these two movements here. Now, marking the break of structure, everyone knows that we mark this here as a break of structure, this is here as a break of structure, this here is a break of structure. Same applies in the downtrend. This here is a break of structure, this here is a break of structure, this here is a break of structure. But you have to know that in the episode of market structure break, we learned about the types of break, where we learned about week to week breakout, and also we learned about week to body breakout. Okay, and we said these are the varied break of structure that we consider all the time. Now, in marking any break of structure, any market structure break, it doesn't matter it's a break of structure or a change of character, we only use week to body breakout. We don't use week to week, and I'm gonna tell you why later on. So we use only week to body. Now, what is week to body? That means here at this swing high, we need to see the highest wick from there being broken by the body at this continuation phase here. And of course, we talked about market phases. So in the previous episode, if you haven't learned that, please go and watch the previous episodes. So we need to see a weak two body breakout. That is how we mark the break of structure. That is how we mark a break of structure. So we mark from the highest wick here. Also here we mark the high being broken by body right here. Okay, same applies here. Also in the downtrend, we mark the lowest wick of that swing point, and then we mark that being broken by a body of a candle, a lowest wick being broken by a body of the candle. So that is how we mark the break of structure. Now, going on to a second thing where we try to differentiate between a valid break of structure, a valid break of structure, and invalid break of structure. Here we talk about two things. Normally we use these types of break to identify the valid and the invalid break of structure. In a valid break, we need to see a clear wick to body breakout. Okay, we need to see a valid wick to body breakout, meaning if we have a break of structure here, we need to see this wick here being broken by body. Understand? Good. Now, invalid break of structure, meaning the structure is being broken just by using wick to wick. So this is the wick to wick breakout, meaning here we find just wicks, a structure being broken by wicks. So that is not a valid break of structure. So whenever you see a wick to wick breakout, it doesn't matter it is a candle to candle break or structural break, we need to see wick to body and not wick to wick breakout. So normally when you see a wick to wick breakout, we say in the structure, we say that is the structural failure. Okay, structural failure. Why? Because the market failed to confirm this, to validate this area by breaking with a body. I hope you're getting the point. So to differentiate valid and invalid, we just use these types of breaks. Okay, so whenever you see wick to body breakout, that is a valid break structure. Whenever you see a wick to body breakout, that is invalid break of structure. Good. Now, in the case of FTA, okay, so in the case of FTA, we need to see, first of all, FTA is just a term used by traders to validate or to verify a structure before break. Okay, and sometimes people say like it is areas where can trouble you to continue with the analysis that you performed. Now, FTA is the very large and it is a very wide subject. I will have to create a video just talking about FTA, and of course I've talked about it, FTA, in the previous episodes, in the previous videos. You can just go and watch that, but I will come up with a new video concerning FTA. But in the case of this market structure, FTA, we use FTA to verify the structures. Now, before we talk about FTA, I want to talk about time frame first. We need to understand time frame. And in the time frame coordination, we have two series of time frame coordination. We have a monthly series and we have a weekly series. So in case you are using a monthly series, meaning monthly is going to be coordinated with daily, daily is going to be coordinated with 1 hour, and 1 hour is going to be coordinated with 15 minutes. Now, in case you're using weekly series, that means weekly is going to be coordinated with 4 hour. 4 hour is going to be coordinated with 30 minutes, and 30 minutes is going to be coordinated with 5 minutes. But all of this, we can use the universal time frame to verify structures, you know. So we have universal time frame, which are the 5 minutes itself, 3 minutes, and 1 minute. So 5 minutes coordinated with 3 minutes coordinated with 1 minute. So this universal time frame can be used in either of these series. Whatever the series you're using, whenever you reach the 15 minutes and you see the structure still gives you a high risk, meaning you will go to the universal time frame to refine more. Okay, so we use this universal time frame for the case of more refining of the structure to get a low risk entry or a low risk areas where we can place orders. Okay, good. Now that we have known the time frame coordination, we need to know FTA. How can we apply FTA concept in the time frame? So FTA, the first role and the main role of FTA is to verify structures. Okay, the main role of FTA is to verify structure. Now we know that a valid breakout structure is when we use a wick to body breakout. Okay, good. But sometimes you can find a structure has performed a wick to body breakout, but still the market didn't respect. So you find some areas where you find a wick to body, but the structure don't respect that. The price don't respect that structure. Why? Because of FTA. Now, FTA, we use it to verify, is it a real wick to body breakout or not? Now, in between this series, we have time frames which are not inside the series. Those are the time frame that are called FTA time frame, meaning the time frame that we are going to verify the structure. Now let's go. Now in the monthly series, between monthly and daily, we have a weekly time frame which is hidden. Okay, between daily and 1 hour, we have 4 hour, which is a hidden time frame. Between 1 hour and 15 minutes, we have 30 minutes, a hidden time frame. Same applies in the weekly series. Between weekly and 4 hour, we have daily. Between daily and between 4 hour and 30, we have 1 hour. Between 30 and 5, we have 15 minutes. Now, whenever you find a structure, let's say we are using let's say we are using this weekly series, and then we found a structure in 30 minutes. For example, we have find a 30 minutes break of. So this is the 30 minutes. Now, this 30 minutes break of structure, we need to verify it. Okay, we can see that, okay, it is a week to body breakout, but is it really a week to body breakout? That's the question you have to ask yourself. So in order to know that it is a real week to body breakout, we need to go to the FTA time frame. Now, the FTA time frame is the higher time frame that is hidden from that series you are in. So for example, we are in the 30 minute structure. So the higher time frame that is hidden on this series is what? Is 1 hour. So we will go to the 1 hour to verify this structure if it is really a week to body breakout. That's a secret, guys. That is a secret. I mean, this will help you a lot. Now we're going to go to the chart and see and practice this in the real chart. All right, now I'm in the USD CHF chart. I'm gonna try to show you some of the examples on how to verify a real break of structure. Now, for example, you may be wondering why this structure here, price failed to respect and went high, and instead we had this break here, and this was a real break of structure, which is a weak to body break of structure. So clear. But if this is the 5 minutes chart, if we go to the FTA time frame now, since we are in the universal time frame, meaning we will go to the 15 minutes to verify the structure. If we go to the 15 minutes, we find out that that structure we marked, it is not a real break of structure. That's why the price went higher. Why? Because the price here performed week to week breakout and not week to body breakout. Are you getting it? I hope everybody's getting it. I hope everybody is getting it. Right? Yes. So, for example here, okay, this is the break of structure. Okay? Now, this is the break of structure. This is the 15 minutes. In order to verify if this is the real break of structure, we need to go to the FTA time frame. From the 15 minutes, the hidden time frame from this monthly series, from this 15 minutes, is 30 minutes. And then we go to the 30 minutes, we see that is a clear break of structure. So we are able to trade this structure here. Let me find another example. Right. So we are in gold right now, and this is 15 minutes time frame. Now look at here. Why this price didn't respect this structure here? Why? Because of FTA. Now we can see here, this is the clean week to body breakout. A clean week to body breakout. But why price went all the way there? Why? Because if we go to the FTA time frame, we're in the 15 minutes. If we go to the FTA time frame, which is 30 minutes, we see it is not a week to body breakout. It is week to week breakout. That is a structural breakout. So we cannot trade this structure. Instead, we will find structures to trade to go higher. A very simple way to verify structure. This is how we verify structure. All right? A very simple way. Using FTA to verify structure. So the last example here I can show you. So this is still gold and this is 1 minute time frame. So you can verify even smaller time frame structures. And you can see here, this was a clean break, a week to body break. And I hope we had something like news here. Very good, clean break. But why the price did not respect this? So somebody maybe put the entries maybe here, or maybe using this liquidity engineering here. So somebody may have an entry here. Good, perfect. But the question is, did you verify this structure? Did you verify this structure? So when you have a universal time frame, meaning we will just jump into the higher time frame. So 1 minute to 3 minutes. If you verify that structure, we find what is happening there, a week to week breakout. There you go, baby. There you go. A structural failure. That's why we find the price didn't respect this area and went further. So this is the simple way of marking or verifying the structure that you are trading. So that was it. That was it, man. Use it. Use it everywhere. Every structure you're trading, you have to verify it. And you'll thank me later. That's it for the episode 5, and episode 6 is coming soon. So make sure you subscribe and turn on the notification so that you're going to be the first one to learn and master the market structure. See you on the next episode.